yes, it's going to be choppy, I would imagine, over the next few years. For a new investor coming in, it's certainly scary. You need something that can outpace inflation. The stock market has consistently done that. 100 grand there, you're losing 10 grand of spending power every single year. Be excited about the future and the fact that you have this ability now to get in at what I would consider good prices.
So today we welcome Damien from Damien Talks Money, which is a really great subject because we love talking about money. So welcome to the podcast.
Welcome to the show.
Thank you. I appreciate it. Very flattering getting me down. So
You're more than welcome.
So the markets are a bit crazy at the moment. They're obviously going down. We've had this amazing bull market during the pandemic. How are you feeling about the state now? And new investors that have got in, they're probably a little bit shocked what's happening.
Yeah, certainly. I think the landscape's changed in terms of low interest rates, which have probably propelled markets over the last decade. And for a new investor coming in, it's certainly scary as they see that change. I was reading this report by Credit Suisse, which is their annual yearbook on returns, and they show in periods where rates hike, the S&P or US markets tend to return about 3%, whereas when they decline, they return about 9%. So we would expect over the next couple of years, as the rates get hiked, interest rates are brought up to tackle inflation, that markets return less. But we've been through periods of, I haven't, you know, your dad has been through periods of high inflation before.
It's kind of way of saying he's old.
Yeah, thanks for that. Yeah, I'm feeling old today, funny enough. But yeah, certainly I've been through times of boom and bust and high inflation and certainly high interest rates because, you know, I've known times where interest rates were 15%. Now, that might not have been for very long, but they were certainly up that way. And if you think about it, if you've got massive mortgages and things and suddenly you get hit with a 15% interest rate, you're going to have to sell, aren't you, or get out? Yes, terrible, absolutely terrible.
So why should people still be excited if we're facing this terrible future of stocks and crypto?
But, I mean, what is the future, right? So short term or long term? I think people, when they say, people talk about risk within the stock market, what they mean is volatility in the short term. I would argue that you're taking more risk not investing for the long term by having your money in a bank account, etc. So be excited about the future and the fact that you have this ability now to get in at what I would consider good prices. Yes, it's going to be choppy, I would imagine, over the next few years, but if you've got a 10-year time horizon or a 20-year time horizon, there's nothing to be but excited. I think you could pick any period in the last 50 years, start investing, and as long as you'd invested for longer than 13 years, you would have made money.
For someone that doesn't understand investing there, you said putting your money in the bank account is more risky. Can you explain that on like an easy to understand level of why that is?
Yeah, so have you ever played like Gran Turismo or a racing game where you've got a ghost car?
I think I played Forza. I don't know. Yeah.
Whichever it is, sometimes you're driving around the track, aren't you? And there's that ghost car that you're trying to beat. Inflation is that ghost car. And if you've got your money in a bank account, you're just sat still. You need something that can outpace inflation. The stock market has consistently done that. Now, inflation affects everything, the real return of things. If inflation is 4%, everything is affected by that. But the stock market has a track record of outpacing inflation, for beating that ghost car. Putting your money in a bank account, it's just going to lose. At best, at the minute, I would say 10% probably, you know, in value each year. So if you've got 100 grand there, you're losing 10 grand of spending power every single year.
Well, that's what I always say. You're guaranteeing yourself a loss by putting it into a savings account. Whereas if you're putting it into investments or into index funds, you're giving your money the chance to do better. And it's a very good chance to do better in the long term, isn't it?
Yeah, it's 50-50 on any day. So it's a flip of a coin whether the market's going to go up or down each day. And these day traders are basically trying to flip that coin. Whereas long term, you know, over 100 years, the market's averaged 9% before inflation, which is an amazing return for people for something that's quite easy to do passively.
Because I get DMs every single day saying that stock you mentioned, it's down today or it's down over the last 6 months. And I always have to write back to them and I say, look, we always talk long term. On all of our videos, we would have used the term long term. And to me, long term is 10 plus years. And I only say 10 plus because realistically you should be talking 20 to 30 years, not even 10. But I find it hard to get over to some people that even 10 is you know, you've got to get past that at least.
And it's a different thing when you're kind of in the seat, isn't it?
Yeah.
So well done for replying to people, first of all. I think
We
that's
tried to.
Yeah, I think that's amazing. So I had a message the other day that said, I bought, this Vanguard index fund and it's down 11%. Do I sell? She's like, I know it's long term, but it's down 11%. And it's this, you can communicate a message and people can say in the good times, I understand it's long term, but as soon as the arse falls out the market, people...
And then they start blaming you as well.
Yeah,
They're like, you told me to invest in this,
yeah.
and now it's down.
Yeah, at least I didn't pump Voyager or Shiba Inu or something like this. But people certainly turn, and the emotions are the hardest part of the investing long term, I would say.
It's trying to take that emotion out of the investment, isn't it? If you've done your research and you believe in what you're putting it into, you've got to look at it on a long-term scale. So all this one-day trading or 1 month trading or even 6 months, it doesn't really give you a picture of where this is actually going to go.
Yeah, I have proof of concept because I came of age, investing age, during the financial crisis. So I saw it collapse. I saw what was unprecedented turmoil within financial markets, and then I saw it recover. So I know how bad things can get and how they can recover. A lot of people that started in the last 2 years, they don't have that, do they? And while people can say, it happened 10 years ago, that you sometimes don't believe it until you see it.
Well, we actually put in one of our latest videos, didn't we, all the headlines from 2008, 2010, and you'd believe the apocalypse was happening.
Yeah,
it was
true.
the end of everything forever. That was it. We're all still here, aren't we?
Yeah.
So we're only facing another cycle at the moment, and it'll all turn around again, and historically it always comes back.
Yeah,
Hopefully.
Yeah.
So that invisible car that you were talking about of inflation is at 8.5% in the US and about 10% in
So
the
they
UK.
say.
So they say.
Yeah.
Do you think it's going to slow down anytime soon?
I don't think that interest rates are at a level where they're gonna taper that at the minute. I think they're using interest rates and they're rising them quite timidly to taper inflation. I don't think we're there yet. I think the next set of data is maybe the 13th of July. I'm never going to bet on inflation, betting which way the market's going to go and all of that. But if you put a gun to my head, I would say I think the figures are going to be grim and the markets would take a little dive. Maybe it's started to taper off, who knows? There's bigger factors at play, isn't there? Supply chain issues. And then we enter this period now where you see it with the public sector in the UK, everyone's demanding more wages.
Yeah.
And then you get wage-based inflation because all the costs go up and then the businesses need to put their prices up and you get this kind of doom loop. So it's not as simple as 1% interest rate, problem solved.
Well, when I discuss it with people, the inflation rate, I say, do you think this is real, this inflation rate? They say, oh yeah, 10%. I said, well, when was the last time you bought something that was only 10% dearer than it was a year ago? I said, it's more than that. You look at
doubled.
Look at fuel, look at building materials, look at your grocery shopping. All of it is more than 10%. So the way they manage those figures, a good statistician, that's easy for me to say, can make statistics say whatever they want them to say, and I'm sure they're pushed down as far as they possibly can. So it looks like the best picture they can possibly present.
Yeah, there's lies, pure lies, and then there's statistics or something like this.
Yeah.
They leave out things like rent, which are one of the biggest costs in people's lives. How can you say like rent inflation of X amount doesn't factor into how people live?
And they substitute certain items as well in this basket for the CPI, don't they? It's just crazy how they can manipulate the figures like Dad's saying to say what they want so people aren't too scared.
Yeah.
So obviously you talk about money on your channel. Damien talks money.
Yeah.
How do you get people excited in times like these to actually invest into the markets? And how are views? Are they less or are they more?
I swing around on my chair and act a fool. Do stupid
So they
stuff.
come back for that.
Yeah, maybe.
Bit of WD-40.
That's it. Yeah, it's highly needed. In terms of the views, I would say are down, but that I would almost point to that being summer as well. I think there's a cyclical nature within YouTube, and I've only got 2 years of data really, so I don't really know. But it just definitely appears that when it rains, I get more views. When it's cold, I get more views. That Q4 is massive for our niche in terms of people are like, right, I'm going to sort my life out.
Yeah.
And then you get in the summer, a lot of people go, I'm going to empty the account and go to Zante and blow it all kind of thing. So I think there's that seasonality. I do think though, for me, from when I first started to now, a lot of people buy the narrative of invest long term consistently, and people aren't as scared of the decline in the market. I put up polls on my Instagram and 90% of people always say, I'm buying. I think people have had a real shock in the last couple of years in terms of finances, realised that a day job isn't that stable, and have looked to the markets and have bought into that narrative from people like ourselves that if you do this consistently long term, there is a way out of that, or at least security that you can provide outside of a job.
Well, society has always pushed you that you go to school, you get a job, you get a mortgage, you get a family, and you move on. It's never ever during schooling or your early education that you're taught, actually, you're going to need a little bit more than that. You've got to learn about how money works. Because before you leave school, you're not in debt, are you? You don't owe anyone anything. When you start earning a little bit, you're suddenly in huge debt because society's pushing you down that route. So I think a little bit of investing knowledge at school would be a great thing.
It's criminal. EdXL, which is like an exam body, I looked at their mandate, and it says to prepare people for life, essentially. But then they leave out any form of financial education. I can tell you the order of Henry VIII's wives, but I couldn't tell you how to pay a direct debit leaving school.
Yeah.
You know,
and that is crazy, isn't it? Because the one sure thing that you're going to get, and they're preparing you for getting it, is money. You know, and if you can't look after money, you know, those lessons you're going to learn.
But it's by design, isn't it?
Yeah,
so you fall into
so
the debt trap.
Yeah. The credit cards hit your door on your 18th birthday, don't they? Here you go, here's an Aqua card or whatever.
Yeah, enjoy yourself.
Literally blow it in one night, which is kind of like what I did at uni. You know, I made all those mistakes in terms of finances. It's shocking, really. And it's all, like you say, it's by design. If you question why do they leave it out, why are they leaving out financial education from that system?
How about the crypto markets? Because obviously they gained a lot of popularity during the pandemic. How do you think they've affected people's view on investing? Because I know certain people that have invested everything into crypto coins and they've completely crashed in value and they're never going to touch investing again, or that's what they say. Have you experienced that in the markets with your viewers?
Yeah, so that's a crying shame if someone's gone all in on crypto. I think anyone sensible would talk about diversification and diversification across asset classes, stock, shares, bit of crypto. I've got a bit of crypto, for full disclosure, mainly Bitcoin and Ethereum.
Same as us.
Yeah. I think if you look at the market cycle of that and the adoption of it, it's probably right where you'd expect it to be. But when it falls, everyone loves coming out and saying it's dead, don't they? You know, but for me, it could die tomorrow. It's never going to burn my house down. I personally am bullish on it long term, especially Bitcoin and Ethereum. I think the whole industry has been spoilt by a lack of regulation and the predatory nature of the scams within that. But I think if you look at the adoption of any technology, for example, the internet, it was the exact same. You know, pets.com with no business model, the IPO in and rinsing people.
There's so many of them. It was unbelievable during the time. I mean, I looked at everything. I said, well, you got no business there. All you got is a name. How can that be worth multi-million pound valuations? You know, it was ridiculous. And that was one of the reasons I pulled out. I just went, this is just going crazy. And I was lucky in the .com that I pulled out to buy some real estate. I just went, no, I'm coming out. I want something real, tangible. And literally 2 to 3 weeks later, that's when the crash happened. And I'd have been, you know, I couldn't have bought my first warehouse, if that had happened to me and I'd left the money in .com. So it's very, very similar to what's happened with crypto, really. And I think what happens is the greed takes over. And once your hairdresser is asking you what you're investing in and telling you what he's investing in, not necessarily just your hairdresser, but you know what I mean. Everyone,
the average everyday person.
The average everyday person suddenly getting in. They all get burnt, and then they don't want to know about investing from there on, which is a shame. And we've never pushed anyone to buy lots of crypto. We've always said that my stake is about 3 to 5%. And again, like yourself, that's not going to wipe me out if that goes to zero. I'd hate it to go to zero. It'd sting, you know, for a little while, but it's not going to wipe me out. But when you can see the returns they were getting on it, you can understand why people are going, no, I'm going to put it all in there because that's going to be worth 10 times by the end of this year or the end of this week, even in some cases. So certainly the carrot's there for them, that's for sure, or was.
The worst thing is, I come down on the train about a year ago and I saw Flocky Inu advertised on the tube stations. If you advertise a stock in the UK, you're in a lot of trouble. But you can do that within crypto, which I would argue is far more risky than the stock market. So,
and that was named after one of Elon's dogs. Wasn't it?
It's
crazy.
It
went from Dogecoin to
Floki.
No.
So I think, you know, I feel people need to be personally accountable, but when you're saying that people haven't got a financial education and then they're going on trusted establishments like the Underground and seeing an advert for a meme token, can you excuse that person for being like, well, maybe that is a legitimate way to invest, you know? So I think that it's a real shame.
Yeah.
So where do you see the future of crypto? Because that's lots of people have different views on that, and you've got Bitcoin and Ethereum, which is what myself and Curtis hold. But where do you think it's going?
Why are you so bullish on it?
I wouldn't say I'm so bullish, and I don't want to get laughed out of the room because people love kicking crypto heads down at the minute.
Yeah.
The way I would see it is it's not a currency. That's a bad name for it. I would see it as a platform that people can build upon. In the same way that internet revolutionized communication in the form of email, I can see our cryptocurrency, or maybe a handful, revolutionizing the transfer of value. So moving value from one place to another.
Yeah.
For example, Bitcoin, there's a lot of people that have energy, or a lot of countries that have energy that they can't use effectively, geothermal and stuff. They don't need it. Iceland, they might be able to mine that energy, essentially convert that into Bitcoin and change that energy into real value at source. I think that is far more interesting. And in the same way, the internet, it's this base layer technology, and on top of that you build applications. I think to me that's what makes sense, a monetary form of the internet that revolutionizes transfer of value in the same way the internet revolutionized communication.
So do you think in the future we'll also be going around spending credits and using crypto in everyday life, or you see it as this underlayer that we don't necessarily see?
I like the US dollar is going to be replaced by Bitcoin. I don't buy that. I think the systems in place are too robust. I think the dollar has a lot of aces up its sleeve to kind of fight that happening.
But what's going to replace the dollar?
Chinese currency.
do you think? I don't know. I think it's a very hard battle, and there's going to be quite a battle over this, because being obviously the world currency is definitely a big plus for the dollar at the moment, and they're going to hit quite a wall when it all collapses.
They've got it linked to oil, which is like they got rid of the gold standard and introduced the oil standard essentially. So you have the petrodollar, and as long as we need to buy oil in dollars, they're going to hold on to that quite tightly. I mean, you know, people say the dollar's collapsing. Look at the pound versus the dollar at the minute.
I know, it's crippling me on purchasing,
exactly.
But you know...
Did you put that on your story? I think I saw that on your story.
I might have done, yeah. I mean, it's good for getting paid in dollars by sponsors.
But likewise, where would you look at it? Would you say the pound is weaker than the dollar, really, on the way it's falling? I don't think it is. I think the dollar is set for a cliff, to be honest. That's my personal feeling.
It seems mad that you can dump 1/5 of all dollars into the system, and then it rallies versus. But maybe that's sentiment. That's people thinking. You know, I don't know. It does seem crazy. That Ray Dalio, he speaks a lot of sense on that, on the changing of world order. It sounds kind of conspiracy theory, but the guy is super smart.
Switched on, isn't he?
Oh, the biggest hedge fund ever, essentially. And when you're looking, and I think he's made 33% this year, year to date, which, you know. So when you look at what he's saying, it makes a lot of sense. It's happened before, happened with us, with the pound.
Yeah, of course.
But coming back to your original point, I don't think a cryptocurrency is going to come in and replace the dollar anytime soon. But I think the building of these applications on top of that network, I think networks have value. Telecommunications networks have value. I think cryptocurrency networks, hundreds of millions of computers that can communicate on a decentralized ledger, that has value.
So how about real estate? Are you investing in houses yourself?
I would if I could, but because I've quit my job, I can't borrow. I actually was about to secure a property on. I mean, I'll just tell you because I can't get in trouble now. I'd handed in my notice and I was going to exchange on a property in Southport for an Airbnb, but it fell through on the very last day, and now I can't borrow because I'm a brand new
3 years of
brand new limited company.
Yeah.
I earn more money now than I did then, and I've got the cash, but I can't borrow.
I'm in the same issue at the moment.
I can imagine you could just buy it cash.
But it's not a smart move, is it? So
cash and refinance.
Maybe you never know.
I used to sell investment properties. Off-plan stuff, mainly to like the Arabs and the Chinese in Manchester when that was booming.
There was loads going when they're up there. They're in Leeds.
It was crazy. Probably too much, because as a developer, you're just selling it. You know, you don't care if it rents really. I think property on paper sounds good, but there is a lot of management involved. Stocks don't necessarily have that. This is coming from a guy who can't buy property at the minute, so I'm going to say stocks are better.
Well, I was quite lucky. I knew I was going to leave my job. I'd made that decision, and part of the decision of leaving my job, which was 6 months, I think, prior to actually physically doing it, I made sure that I bought a business. Sorry, not bought a business, bought some real estate. I bought my first apartment because I knew that the situation, it's always been about 3 years of good books, not just books, good books, before you'll be able to buy a property or be able to borrow to do that. So that was one of the moves I made that was certainly sort of an advantage for me at the time, because obviously starting my first business, there was no way I could buy a property.
What I like about property is it generates a yield in the form of rent that doesn't diminish the value. You know, with a dividend, a business is giving you £10 from their account, so they become worth.
So they're not using
less.
it for growth.
Yeah, exactly. Yeah. Whereas with a property, it has an ability to generate a yield without affecting, the value of the property. So that is super attractive, I think, from an investment standpoint. I think it's all about just fingers in as many pies as you can.
Yeah. So house price is about 10 times the average salary at the moment. How does a normal person actually get into real estate? It seems impossible.
Mum and dad, it seems to be. Yeah, it is nigh on impossible, isn't it? It doesn't make much sense either. But the government continue to supplement demand instead of increasing supply. They seem committed to not increasing supply. I think we need 340,000 homes a year to match demand.
And what are we doing, about 200,000?
And that's a good year. That's like one of the best years ever.
Yeah, we're generally building half what the perceived need is.
Exactly.
If we say at that, and that's always going to keep demand high, even if we do face a drop. So that drop, I don't think the drop is going to be anywhere near as big as we've seen in the past. In fact, I don't think it's going to be a crash. That's for sure. I think it might be a slow down, maybe a slight decline. Maybe, let's say, 10% maximum, I would have said. So, and I'm looking at buying a bit of property at the moment. So,
we're thinking about starting a property development, well, not property development, property investment company as an arm to our business. Which there could be some good opportunities that come up in the coming recession.
You get some good content on it as well, can't
you?
That's
part of the plan.
Monetize everything.
Well, you monetize the fall down the stairs, so I don't doubt it.
No, I'm not doing that again.
That was a good stunt.
I'm still a bit short of breath at the moment, aren't I? So it's don't really want that. And that's about 2.5 weeks ago now that happened. So I am recovering.
I mean, you're looking well.
Thank you very much.
We pushed this back, and I was saying to Curtis, push it back as long as you need. Your dad looked rough at the time. And
thank you. In fact, in the video, I had a purple head, didn't I? It was so hard to breathe. I tell you, that was a definite life-changing experience. And there's going to be a lot of other changes that happen because of that going forward, which we'll let you all know about as we go on.
So obviously, we do the YouTube channel, and you do the similar thing. What inspired you to start, and why do you enjoy doing it so much?
I would call it ignorance inspired me to start. So what I mean by that is I saw the American guys doing well, and I thought they are killing it. And
Graham and Andre, Meet Kevin.
And even like Jeremy, I saw he had a lot of longevity in what he'd done. And I looked at the UK and I just thought there's no one doing anything. There's a couple of people, Mama Furfur and so I thought there's just no one here this seems to be a niche where no one's YouTubed it. The UK.
I think there was the Humble Penny as well.
The Humble Penny, a guy called Conversation of Money at the time was coming through. So I just jumped in, and then I realised there's actually hundreds of people like trying to do this. So I kind of had that. If I'd have known how many people were trying it and not succeeding, I wouldn't have done it. I just jumped in and went for it. And then it came to a point of like I was doing my job badly and I was doing YouTube badly, so one had to go.
So what were you doing before? Was this the selling of apartments?
No, that was prior to that. I worked for an accountancy firm that focused on, like, quite a large accountancy firm. We had about like 50,000 people on our books, and we focused on limited company efficiency for tax, mainly for contractors. So we would just, if you were a contractor, we would just reduce your tax burden. I was a sales guy within that. So it was account management essentially. So I've always been within financial sales.
So that was your unfair advantage that you were bringing to the table when it came to YouTube. You're very good with numbers and breaking things down.
Yeah, I think my sales background has given me the ability to communicate a financial message in a simple manner. Yeah. So what I'm good at is taking something that people don't understand. I walk into a room with Barclays Bank. They don't understand why they need us, and I need to tell them in 5 minutes why they do. And that probably was a good skill. And then I just thought, I'm just going to lean into my Britishness, which is what I have done. Now, that only takes you so far, and I think that might hold my channel back slightly at the minute, but I thought I'm really going to lean into the ISAs, the pounds, the British humour, and second video took off.
And then you started using dollars recently.
Yeah. I'm just speaking to you. Like dollars, euros, pounds, lira, rupees, just mention it all.
Well, the thing with dollars, immaterial whether you're talking US dollar, as soon as you say dollar, that covers 3/4 of the globe, because most currencies are dollars, be it Australian, Canadian,
You understand it, don't
US. They're straight away. Whereas you say pounds, most Americans say pounds. How much do you weigh?
Yeah.
What he talking about is weight here. It's better to talk dollars. And I would say 99% of Brits can convert dollars to pounds like that. It's not that hard, and you can just insert pound instead of dollars anyway, because it's so close. It really doesn't make any odds.
Yeah, but you say a dollar cost average, it gets shouted at.
Yeah.
It's funny.
Do you say pound cost average?
No, I've never said that. It's always been DCA to me.
Yeah.
And people are like, oh, it's pound cost average.
It doesn't quite flow the same, does
No.
it? What do you think about all these finance TikTokers blowing up, or at least during the pandemic? Their advice maybe isn't quite as good as the YouTube side of things.
It's super ropey, isn't it? And I think that, you blew up on TikTok. You can simplify finance, but it's not a simple topic. There's a lot in it. So a 10-second video saying do this and you'll be fine, I don't know.
No.
And it leans into the sensational, doesn't it? There was people talking about buying virtual land and all kinds of like wacky stuff on TikTok. I think the thing is, like, if you're going to listen to someone, they need to be quite transparent about like where they've come from and why you should listen to them. They don't have to be a millionaire. They don't have to be a genius. They just need to be able to say, like, I've done this in some capacity and this is why I can talk about it. I just highly doubt a lot of the people on TikTok have ever done anything beyond make a little bit of money on a speculative crypto bet.
Well, some of them haven't even done that, They just go on and start talking about finances, and they literally don't even have a job.
Yeah.
Some of these people anyway.
I come from a regulated space traditionally. Everything I said was regulated.
Yeah.
And it's wild to me that you can just jump online and reach 1 million people with a like, buy this now. That is crazy.
The majority of our TikTok's always been to lead you in to understanding something, simplify it to a point where people go, I sort of get that, and then come and find us, because we will talk more in depth about it, but still hopefully on a simple way, so that we don't lose you within the explanation of what we're talking about. That's sort of been our route, hasn't it, on using TikTok.
The simple message is the main one. I think I fall into this trap of when you start a YouTube, you start really simple, what is an index fund? And then you kind of feel like you need to compete with all the smart guys, and you try and get more and more complicated. When in reality, stop trying to impress the people that are smarter than you. There's millions more people behind you that know absolutely nothing, and they're the people you need to talk to.
I think it's a tricky one as well, because if a subscriber joins your channel for the simple content, and then you don't bring them along and improve the content and make it more detailed as you go, then they'll move on to the more detailed channels. But then also you want to still be accessible to those new investors. So it's a hard one to juggle, I think. How are you doing that?
I feel like an obligation to my subscribers that I've kind of brought them on this journey to a point now where it's like, right, what's next? But then at the same time, someone jumping in on that content might be like, what's he going on about here? Like, I need the basics.
Well, that's one of the reasons that myself and Curtis are writing a book, because we want to put it down in a book format, so that we can perhaps move on with what we're teaching and trying to improve for everyone. And once it's there, it's in black and white, isn't it? And a lot of the financial things don't change that much, so people should be able to benefit from obviously what society's done to them, hopefully.
Yeah, obviously that book is going to be quite evergreen, but that's another thing as well, juggling evergreen content with topical stuff. So how do you do that?
So I've got a few videos that, like, one video, probably my second ever video, is like 400,000 views, 15,000 subscribers, clocks views every day, and just runs forever. And that is an evergreen video, so you see the power of it. But there's an ego element where you need to be prepared to release that video and it do absolutely nothing.
Yeah, 10 out of 10.
Yeah, which is hard for a creator, right? Yeah. We feel like everyone's watching us within our space and judging us. And it's very tempting to be like, market crash 2022, do this now.
But then they just die, don't they? Yeah. Because they're not applicable past a certain time.
I watch some channels and I'm so jealous of like Sunny V2 or something like this. Like the problem with this thing, and you think that video could be watched for like a decade.
And it's highly clickable as well.
Yeah, and that's kind of where you want to be. I think you need a balance. And I think during the summer months, like now, when there's a downturn in discoverability, maybe that's the time to sow those evergreen seeds. I don't make many videos. I mean, I need to make more videos. I made 3 videos last month, so
that's not too bad. Nearly 1 a week. But yeah, we reined back to 1 a week from 2 a week, and now we're going to try and do 2 every other week, maybe do 6 a month or so.
That's where I want to be, six a month. Because for me, people are like, have you done a podcast? Have you done this? I've not even hit a cadence with my uploads. For me, from an income perspective, if I double the amount of content I make, that's going to change my business. So that's kind of where I'm trying to get to.
Yeah, the trouble is sometimes doubling your amount of content waters down that content, and then the viewers don't go on it, and actually you don't double that income. So it's a fine balance, and I think for us, certainly 4 a week is our minimum, which we know we can do because there's always stuff to talk about.
Unless you fall down the stairs.
Well, yeah, and that obviously gives us a little bit of a break, gave me a big break. But 4 is
there are easier ways to get a break.
Yeah, four is certainly a good number for us, and then with the podcast as well, and because the podcast is more now about striking it big and how people can move forward with their lives, and everything's possible for pretty much everyone if they put their mind to it. I think we've got quite a lot of work there, haven't we? So
yeah. So we've talked about this coming recession. Now, how do people prepare for it? Like, what are you doing with your money, and what should they be thinking about? Not necessarily financial advice.
So a good investment plan doesn't change based on the market or the economy. I think Warren Buffett said to me, we've never made a decision based on what we think the economy is going to do. So my investment plan is exactly the same as it's always been. I mean, I do dabble with individual stocks, but I always thought that I would start with index funds, and as I gained more knowledge, I would move to individual stocks. I would honestly say the opposite is true. The more I understand, the more I think, global index fund and forget about it, mate, because it's just...
Yeah, I dabbled in individual stocks, and now I'm like, I'm just going to go back to index funds, because obviously they're the way to go. It's a lot of effort,
isn't it? Like, have you got that time? You're trying to build a business here. Do you have the time to pour hours and hours into research, which is essentially what you need to do? And are you really the smartest guy in the room? Be honest with yourself. Like, Harvard graduates sat at Goldman Sachs get it wrong. Why are you going to be any better than them?
Yeah, I think there is the play, isn't there, that I like. I do like having a little dabble on individual shares, and again, I don't know where my portfolio is currently, probably about 10% on individual shares, maybe a little bit less, but I do quite enjoy being a shareholder in a company. I know you are in an index fund as well, but I do like to have those little individual shares, and I do.
And then we can compare them as well.
Yeah, it's like a little competition sometimes, isn't it? Like if he gets out of one, I might really look at it and think, well, actually, I still believe in that, so I might get further into it, and then I'm sort of beating him because it goes up or it doesn't, and then.
But that's only with a small percentage of our money.
So we always call it our play money.
Exactly.
And I know that sounds a little bit trivial, but it is a play money, and again, just like with the crypto, if it does go bosh, then it'll smart a little bit for a while, but it won't absolutely wipe us out. There's no way. So
I think the best way to invest ever is to just buy a low cost index fund, globally diversified, S&P, whatever you want, and just buy that every month as if it's like a routine habitual habit, like having a shower, right? You don't feel right unless you do it. And then, as you say, have your play money. I've got a fair bit of cash relative to my portfolio size in Alphabet. I believe in the business. My business is
I believe the same.
Yeah, we've all got Alphabet.
Yeah, exactly. So
if they're paying you might as well give some money back into the business.
So I'm the same as you, but that's what that represents. That those types of companies represent about 10% of what I invest in. Everything else is just dollar cost average, set it and forget it. And I think no matter what the market is doing, you shouldn't be changing tact. All these people now that are switching from growth to value. You're putting your seatbelt on after the car's already crashed.
How about emerging market index funds? Are you investing in those at all?
Well, I've got about an 11% exposure to emerging markets through my world fund.
And I think that's like a lifetime strategy fund or whatever.
It's VWRL I've got, which is just a global index weighted fairly. Now, I think you can't ignore that part of the world, can you?
No, definitely not.
We talk about Amazons, we talk about Googles. They've got ones doing the exact same, and they've got a foothold in Africa, China. So you're telling me that these two massive regions, which have got all the resources, all the population, all the growth, we just ignore them because there's a slightly complicated legal structure. I've been to the emerging markets on holiday, and they are impressive countries, and I firmly believe that the East will rise in power, so I think you need that exposure.
It's crazy how much spyware they've got, like with TikTok, even Discord. I've been watching a few videos from a guy called Moon, I think, on YouTube, and you can really see how they're going to take over.
they put all this infrastructure into Africa, where they basically come in and they say, we'll give you money and we'll build you, infrastructure. They built like their version of like the UN or whatever, and a computer programmer went in at 2 a.m. and realised that all the data was being downloaded in email to China. So,
it's like, we put the infrastructure in as long as we get the data, which is the most valuable thing, really.
They play by different rules, don't they? And that's probably going to do them quite well. But emerging markets, I think, why not have that exposure when you're talking 2 billion people, maybe more?
You did a really good example of dollar cost averaging in one of your videos using Lego Men, I believe it was.
Right, yeah.
Do you want to explain that a little bit to our viewers? Because I think that really summed up the buying the dip pretty much.
People think that the only way to make money is with
the
share price going up.
Yeah.
But if I actually, have you ever seen the film Boiler Room? I think it is. I think it's within that. It's a great movie. You should watch it. So if I sell you something at £10 today, and then you can buy it for £5 tomorrow, and then the price goes back up to £10, the price has stayed exactly the same place, £10, but you've made 5 on the decline. And that's an example of how dollar cost averaging over time can make you money even in a flat market. So I think that's probably the example you made.
Pretty much. That's it.
So I watched one of your videos recently and you talked about dead cat bounces.
Yeah.
So sometimes when people are investing, they think the market's is bottomed and it's starting to go back up again. But this could be a dead cat bounce. How do people know not to put all their money in then? And then obviously it continues to go down afterwards.
They don't. is the short answer, and that's the problem. I think it's a trap that you beware of. You don't try and dance around it. You just understand that when markets recover like that, there's this tendency for people to pile all in, and then it dips again. It's all human behavior and psychology. You can't. I called the dead cat bounce that time just out of pure luck, in a sense, but.
It's also known as a fool's rally, isn't it?
Yeah.
So, you've got to just keep putting, in my mind, the same amount in every single month. Just keep riding it as it goes down, because that dip and that curve back up, you're going to buy a lot of stock at a low point, and you don't know it's the low point, but if it is, you're buying a lot and bam, you're back in the room.
One thing I do practice, people might call it market timing, is I just buy more when it's really tanking.
Yeah.
So when it was March 2020 and COVID hit, I was about to buy a house then. I just cancelled that purchase because I thought there's returns here to be had, and I stuck I think it was like a 20 grand deposit. I just bought. I was buying daily at that point when it really went, and it recovered in a month, didn't it?
Yeah.
But I think that's one thing that I might practice that other people might consider. I do the consistent investment, but I always have a little war chest and emergency fund. And when the markets really drop to a point where I think it's almost irrational, I'll then start to buy in more aggressively.
What does your portfolio split look like at the moment? How much percentage cash are you holding versus index funds versus
individual stocks, crypto?
Yeah. I hold hardly any cash apart from an emergency fund at the minute because it's just been burnt alive, isn't it?
3 to 6 months?
Yeah, literally. Yeah, 3 to
well
6
done.
3 to 6 months. Probably about 4 months worth.
Yeah.
And then I have 90% of what I invest in is in global index funds. And say 90% stocks, 10% of that is within my own individual companies like Alphabet, like we discussed. The rest is in a global index, and about 10% of what I earn, it was a higher percentage a few weeks ago, it's not anymore, is in crypto.
Okay, yeah. No, I'm definitely holding a bit more cash at the moment. Would you say that I should be investing more heavily? Because I'm just thinking, I know this is the wrong way to think, but some opportunities are going to come up in the market.
Yeah, you can't help it.
Yeah, I just want to retain a little bit of cash. Yeah. And be like, right, deploy.
I think if you're still in the thing is, like, when people talk, they're so binary, aren't they? They're like ones and zeros. It's like, I'm either investing or I'm not. If you're consistently investing every month and you've got a bit of like cash on the side ready for an opportunity, that's fine. It's people that take everything out of the market and sit there waiting for a bottom to time it back in. That is the market timing that I don't think it works for you. I'm guessing you still
investing, just not as heavily.
You just got a little war chest that you might drop in with. I do think that if I had to bet, the markets are going to fall more, so hopefully it works out for you.
How about the car markets, like the luxury car markets? Do you think they will fall? Because I was thinking about buying a nice car with this cash I've got in the war chest. And then using it as an investment, maybe on a YouTube channel, and building up, people. It was a Lamborghini. People are really interested in Lamborghinis online, so that could potentially make the money back, and then I could sell it and make a profit.
Yeah, there's like a YouTuber I saw that Graham Stephan interviewed where he basically said buying a Lamborghini changed his life because he got so much content out of it.
Yeah.
I don't know much about luxury cars. I'm not going to pretend that I do. What I would say is that the second-hand car market seems to have been boosted by the lack of supply into the first.
I think
cars.
it's peaked now, though, the second-hand market. I think it's back down on the decline now. I don't know that for sure, so don't quote me on that. But certainly from the information I've seen, I think it's now heading the other way. So
it makes no sense to me that second-hand cars were selling for more than they were when they were brand new. That's surely a bubble, right?
Yeah, without a doubt. Classic bubble, isn't it? Yeah. But obviously classic cars are a completely different thing. You know, there's only so many of them. I mean, I own a car that I think there's about 50 of, something like that left, and there were
in the world.
Yeah.
Really? I didn't know that.
Yeah, there were thousands and thousands in the day. I mean, I had 2 back in the day, and they both got nicked.
Is it a Robin Reliant? Or something
No, it's not. But I wouldn't mind one of those, funny enough, because they are rare as hen's teeth. And it's a Mark 1 Fiesta XR2.
Okay.
So in the day, you'd have never thought it'd be worth a lot of money now, because there's so few. You know, it's skyrocketing. I can't see the value. It might fluctuate a little bit, but it doesn't fluctuate a lot because of the rarity value. But when you look at cars like Lamborghinis, well, when they're rarer and hard to get hold of, and the waiting list is 3 to 4 years or whatever it happens to be, then of course the second-hand value goes up. You can buy a new car. Someone who's 3 years on the waiting list might go, hang on, save me waiting, I'll buy that off you, I'll give you 20, 30, 40 grand on top. That will happen. But of course, as soon as that supply meets demand, then the second-hand market starts to decline.
I used to know a guy who used to make a lot of money just selling places on waiting lists.
Yeah, it's a big thing. Yeah,
you just get a place on a waiting list and then sell that.
That's crazy. Yeah.
Well, you could even do that on Tesla up until fairly recently. You could sell your waiting list number.
Your place.
Yeah, because it was like a 4-month, 5-month waiting list, wasn't it? And they were in really high demand, and people wanted them before they lost the government grants and
Was that
things.
the Model S Plaid? That
no, I think it's been on a few. So
okay. Yeah, no, like Rolexes are the same. To get a Rolex, you have to, it's almost impossible to get one from the authorised dealer, so you have to go to the grey market.
It is impossible. I've tried. I've tried recently, and I should be able to go in there and go, yep, that'll give us lots of exposure, yep, we'll sell you a Rolex. But, it's just not the case, is it?
Yeah. Economics Explained did a really good video on Rolexes, where they basically showed that the second-hand value on the price on the second-hand market was almost equal to the price you have to spend in a dealer to get access to that at retail. So you have to essentially buy every other Rolex leading up to it, so that you're a good customer, so that you then get off the Rainbow Daytona or whatever.
Exactly. The good way is to buy like lady watches because they're less desirable, and then you can work your way up to being allowed to buy.
But the trouble is they go down in value, ladies' watches, because ladies don't tend to collect watches like guys like to collect watches. So it's
I would love a watch, but I like, from where I'm at in my life, which is I'm trying to build wealth, income producing assets make far more sense to me than showpieces.
Yeah. So looking at real estate, I mean, we've skirted on it slightly, but where do you see that going over the next year, 2, 3 years, in your opinion?
Yeah, so again, it's a simple supply and demand thing, and we seem very committed to not increasing supply, and demand remains high. I think the thing about people in England is they often think that our property market is like the rest of the world. It's quite unique in a sense that we really tie value to home ownership. It's like your home is your castle, right?
Yeah, definitely.
The Germans laugh at us because they think we're obsessed with owning homes.
Yeah, it's massively rental, isn't it, in Germany? Yeah, massive.
I think we're going to go that way, just from a lack of affordability, especially in key big markets like city centres. I worked for a developer, so if the solution to house prices is development, the problem is developers only want to build expensive properties because the cost of building a cheap flat and an expensive flat is not that big a difference, but the exit could be 2-3 times.
Yeah.
Why are you going to build the cheap stuff when you could just focus on expensive developments? But that just makes the problem worse.
Yeah.
I recently saw they might be implementing mortgages that you get and then your children pay off.
Generational mortgage. I think Japan
crazy,
has that. So in Japan you can have like a 100-year mortgage.
But that's going to push up the value of the properties like crazy.
Yeah. So we saw that within the decline, didn't we? When they removed the stamp duty, the prices just jumped by the exact same amount.
Of course they will.
Because people are like, well, I've now got 5, 10, 15 grand extra deposit. Yeah. I think the UK housing market is...
it's a strange thing, isn't it?
Very strange. Very strange. We have got a lot of land. We have got a lot of places that aren't built on, but planning is a nightmare.
Yeah.
Every part of the system that could be made easier to increase demand, supply is bottlenecked.
Yeah.
It feels like there's a lot of people with a lot of money tied up in property that probably don't want a lot of property to be dumped in the market.
Well, just building my extension on the house, I mean, that was tied up in planning for, I think it was about 3 years, wasn't it? It was certainly a long time.
It's been a long time,
and it was absolutely ridiculous, and it was all over a tree, and this tree was an ash tree, and by the time I could actually get them out to look at this tree, because I thought, no one wants to keep this tree. This tree looks awful anyway. They came out and said, oh, Mr. Tilbury, you've got to cut that tree down and burn it on site. It's got ash dieback in it. And I went, so 3 years we've waited for this decision. Oh, yeah, that's no problem. Just plant another one over there, and that's fine. And that's planning.
Yeah.
3 years.
Yeah. We had a guy, so I live near Cheshire, which is like quite an affluent area in the north. And if you can get planning permission in certain areas, you're laughing.
Yeah.
There's a farmer that had like this structure of hay bales.
Oh, that's right.
He built a property in the
inside
middle,
it.
Because if it's standing for so many years
that's
uncontested,
right. Yeah.
they will.
What? So he hid it behind.
Yeah,
hay bales.
Yeah. Made a big barn and hay bales, and then
right.
suddenly there was a house there.
Yeah. So like knocks them down. It was like, oh, it's been standing for 3 years, and they were like, oh, well, you've got the planning permission.
That's
now.
a great idea.
Very clever, wasn't it? Very clever.
So, where do you see your channel going in the next 2 years? What's the master vision for it?
To the gutter. I think I think as a finance, as any kind of creator, you're constantly like, this is going to end tomorrow. Like, so I would just like to hopefully keep scaling it. For me, the key metric, it's not about my biggest videos, it's about my worst. And if I can get 20% of my audience to watch every single video within 7 days, and I can continue to grow my subscriber base, that gets harder and harder to do as you get bigger.
Yes.
Like very much so. Then I'm okay. I would love to have a small team, like you guys really, because it's hard by yourself.
Yeah, very hard.
Yeah. It's just this linear process where I'm like running down the assembly line. It makes no sense. And
you do very well to produce the amount of content you do, just being a one-man band.
Yeah.
Doing all the editing, the scripting, the filming.
And editing for me is like, it's a big task. Some channels, they can just run and gun, whereas I see your editing and it's
Sam's doing that now. So.
Yeah. Editing's one of those things that the better you get at it, the longer it takes. It's like,
don't say that. Otherwise, he'll have
an hourly rate.
He'll have a defence there.
Yeah. I mean, you get quicker, but then you learn of other ways. You're like, oh well, I can add this little pan or this little bit of text effect. So
I think it's choosing what's going to actually affect retention versus what's a pretty edit. Is effective editing. That's
probably where I need to take. Yeah.
And also,
I'm retained in your videos, so it's good.
Okay.
And also, you got to watch for burnout as well. Now, I'll definitely speak about that because that's what I suffered from just recently, and we all saw the consequences on my video. So you do have to watch for that, and if you find you're getting to a point where you're no longer enjoying what you're doing because of the workload that's involved with it, you really want to look at taking someone on. And if you've got 7, 8 things you're doing to produce the videos you're doing, hopefully whoever you take on, you can give them 4 of those jobs at least, and just make it a little bit easier, because once you've suffered burnout, it's not good. It's very hard to come back from it.
I heard you talking about your hats thing.
Yeah.
Like you wear all the hats and then you dish them out. And I think as a creative, which I would call us all, we are creative, we create. It's hard to give over those hats, isn't it?
Yeah, it's very, very, very difficult.
You're the only person who can do it.
For me to give up the editing, that was a big stage in the early days, because I was like, I don't know if I can trust the person that takes this on.
That's the big thing. It is the trust. And when you start most businesses, I think YouTube business might be a little bit different, but certainly when I started with the businesses I had, I think you probably could say you've got 15 different hats on, be it the janitor, be it the sales promotion guy, be it the designer of the product. There's a lot of hats you're wearing, and it is too many. And if you can employ one person to take 5 of those hats, the relief is amazing. And certainly with our YouTube bits and pieces that we're doing, I mean, we never thought it would get this big. I mean, this is quite a business in itself now, but as it grows, you suffer those burnouts along the way. Every time you realize that you need to do more, get more people on board, spread that load a little bit.
I think that's what I need to do. So build out a team and maybe increase my reach globally, because I am very much UK focused, and I think that how big can the UK audience be? But Jimmy Iovine, the guy behind Dr. Dre, said you don't shoot the horse you rode in on. So I am wary of that. Like my audience like me because I'm British.
Yeah.
So I am worried about going too generic, too broad, and leaning into the USA market, which is where the growth is.
I think there's a lot more brand opportunities in the US as well, because they've got a lot more funding in certain companies. So that would probably be a good idea.
One thing I would say is, though, I can charge more to a brand that wants a UK audience because I'm not split. So there's a lot of products that want a UK only audience, and I can command more because 90% of my audience are UK.
Yeah.
And also on affiliate, I do quite well because the product fits. Whereas there's not many affiliates that cross all markets where you go, this is a product. You kind of got to pick your battle, haven't you? You probably focus on US affiliates or
we're working on a deal at the moment that would allow us to access the UK market as well and the US, and we got crypto for both, haven't we? So if you could build out a similar kind of thing, affiliates for every area, then that would be great. And you're going to retain your audience anyway that you've built. So you still have that UK base.
It's all about giving value to your viewers, isn't it? At the end of the day, I mean, we've always said that we'll only take on anything that gives a lot of benefit to our viewers. That's period in any discussion we have.
You're selective on your sponsors. I've noticed that.
Highly selective.
Do one a month, is it? Or
one or two.
We work with like 2 or 3 brands long term on a 12-month deal, and that's what we do, and then it saves us time going on calls and
99% of what we get offered we'll just turn down because we want to be trustworthy. We want to promote what we use, what we're interested in, and that's got to give back to our audience.
And I think you get this fatigue where if you're like, oh, it's this broker this week, this broker next week, your audience are like, what are you using here, and can I trust you? I think that's where some of the American guys have gone a little bit astray. They're just hammering in these sponsors where they're like the quality of them has dropped over time.
Well, I think you've seen it, haven't you, with BlockFi, for example. We've all been offered BlockFi, but at the end of the day we want to go with what we think is a stable platform to move forward with, and that's where we landed, wasn't it?
What do you think about these crypto platforms going downhill like Celsius and BlockFi being bought by FTX, actually, who we do work with? So we kind of do work with BlockFi now in a roundabout way.
Central bank of crypto, isn't he? That Sam Bankman-Fried.
Can't let it collapse, can he?
No, that's it. So I had some money on BlockFi. I did an analysis of them in the past in terms of looked at them, and I thought out of all of the brands within that space, they had the best risk management, and they were probably the most sensible. But to me, it was like funny money, as you call it, and also an opportunity to talk about that space on my YouTube channel. I think what most people don't realize about finance creators is we almost are incentivized to try certain things just so we can talk about them, even if they're not necessarily traditionally solid.
Because if we don't try them, someone else will, so it's better that we give our opinion on them.
Exactly. I was approached by BlockFi, and on face value, I use them as a service. They've paid me all the interest over the year or two that I've used them. Why wouldn't I? But it just didn't feel right. So, and that looks like a genius stroke now, doesn't it? And on the back of it, what I would say is they seem to have survived, but they were worth like 3-4 billion, and he's getting them for 25 million.
25 mil.
That says that business is worthless, behind the scenes. What's disappointing is they've just taken too much risk with people's money. They've clearly lent it out in speculative ways, chatted all this rubbish about,
and they've not been able to pay back, have they? That's the
Three
big
Arrows
problem.
seems to have just dragged the whole lot down. They clearly were borrowing everything, and it's this whole point of they lend your money out, then they lend it again, and it's like 10 times leverage. It's like synthetic CDOs with the financial crisis. It's like bets on bets on bets, and as soon as one goes wrong, the whole thing comes collapsing down.
Do you think this will be the same for all fintech companies with valuation across the board? Like we've seen Robinhood went public and then completely crashed in value. We work with Public as well. These valuations that they've gained during the pandemic, do you think they're highly inflated?
It's funny, if you look at it, the valuations, essentially, you can just cut the peak off, and it's basically we're right back to where we started before the pandemic. It's like all those stimulus checks just got into the hands of retail investors who they went into the market and went, oh, Robinhood or Tesla's the future or this, and they just put in, and that's pumped the prices. I think a lot of the high growth businesses, I don't want to get too technical, but they're valued based on future cash flows because they've got no money now, right? So people are like, I think they're going to earn this amount and that is worth X amount to me today.
Same as the .com era.
Exactly. But as interest rates rise, the value of those future cash flows falls, so that's why these valuations come down. I think when people start investing, they invest solely on what do I think is going to be the next big thing. That isn't necessarily the right way to invest. And I think that's why we see these valuations collapsing.
What about Netflix? Because they've had a massive crash recently, and they're valued as a growth company, I would say. But yeah, they're not growing. They're losing users.
I think they're in trouble. I think the amount they need to spend on content and IP is wild, right?
Yeah.
Like,
and they don't have the big brands as well.
No, and that's the problem, right? So it got to a point where Disney and that were like, hold on, why are we letting these guys have all our IP and make billions off the back of this? I think there's a lot more competition entering the market. I do think, though, that people have, if you're replacing an 80 quid a month Sky bill, you've got room for 8 subscriptions on your TV. I've got Netflix, Disney, Prime, right? And I wouldn't get rid of any of them, even though we don't really use Prime. Like, Netflix is kind of...
Well, it's good for the delivery, isn't it, Prime?
Yeah. Exactly.
It's just a bonus you get the video side of things.
Netflix is like the BBC of streaming platforms, isn't it? It's like it's going to be there. So I think they will have that longevity, but I do think the amount they have to spend on making new content is wild. Like,
the problem is there's always a finite limit to how many subscribers you can get or how many customers you can get. And when you get these big pushes, I mean, Peloton are suffering obviously at the moment as well, but you get these great big pushes during like the pandemic where everyone wants this equipment, and then suddenly there's all this equipment out there, and we all know, for example, with exercise bikes, they become clothes racks, don't they? After 3 months of I'm going to ride this thing every day, that they don't, and then that goes into the second-hand market. The market's flooded with product that doesn't sell. And I noticed it, I think with Dremel years ago, as a modelling tool, they suddenly flooded it into all the B&Qs and the big warehouses like Home Depot. Suddenly no one wanted it because they sold so much out there that they've literally saturated the market. There's no more room for growth. Even if you can maintain it, you're doing well, but you can't do it.
They like what I think people need to understand about stock market valuations in the short term is it's all about expectations. So Alphabet recently, people thought YouTube would grow 30%, it grew 17%. So the share price collapsed because it didn't grow as much as people expected. 17% growth on a business like YouTube is still wild, right?
Yeah.
Google grows at 30% a year. This is a massive company. How is that still growing?
Amazing.
But if it doesn't hit the expectations that analysts have, the price comes down. And I think that doesn't mean the business is doing badly.
No.
It's still growing, but...
Yeah, that's an interesting note. Have you got any final questions?
No, I think I'm pretty much done on mine. Okay. I think that's been a really interesting chat, and we love talking money. We said it at the start, and I think that's been all about money, and hopefully...
So does Damien.
It's literally my channel.
So hopefully you guys have really enjoyed that as well. And if you've got any questions on it, obviously please leave those in the comments, and we'll try and answer as many as we can.
Yeah, make sure to subscribe to Damien's channel, and if you've enjoyed this video, make sure to smash that thumbs up button and subscribe for new videos every Friday morning. So see you later, guys.
See you later. Bye.
Bye.